Investment Hour.
And welcome to the show. I'm your host, Lance Roberts. And Richard Rosso, certified financial planner, making fun of our bull statue in the studio today. What, you're saying it wasn't a bullish day on Wall Street?
No, I'm not saying anything.
So
I'm just reading the Dodd-Frank stress comedy test.
Y'all let y'all talk. Y'all get to talk about that tonight. Danny Ratliff, certified financial planner. You also have a special guest tonight, though, in studio.
We have Jody Eisenhardt, who's a local animal advocate, volunteer, and fundraiser for Rescued Pets movement. I've done an article for Wall Street Journal, New York Times about pet costs in retirement. Hey, listen, those costs go up 7% a year, and it's a big, big business. So we're going to talk about that tonight.
Well, see, I treat my dog exact same way I treat my kids. My
That's
dog comes
not good.
Up,
that's abuse.
I know, he does. He comes up, he's like, I don't feel good. I'm like, suck it up!
Oh, my gosh.
You don't get to go to the vet, so...
Do you keep your dog in a cage?
No.
Oh, you know what this is leading to, right?
Listen, that dog at my house...
Do you keep the kids in a cage?
I keep...
okay.
Look,
I left you wide open for this.
Dude, my wife would easily cage the kids before she cages the dog. So...
And you know what? I totally agree with Mrs. Roberts.
Yeah. You know what? You know what happens if you search Lance Roberts? You know what the second...
I don't even want to look.
Wait, you know what the second most popular search is?
What's
Mrs.
that?
Roberts.
Lance Roberts' wife.
Lance Roberts' wife.
I would think that would be the first search.
So, I guess, and she's actually contemplating. She goes, I need to put a picture up because everybody, that's like one of the biggest searches on the Google is Lance Roberts' wife, but there's no pictures of her. So
she needs to get a domain name, LanceRobertsWife.com.
Now, there you go. We'll work on that. All right, let's talk about the markets today, and then I'm going to turn you loose here with these guys here in a few minutes. Okay, so the news today, there's a couple of things that are still going on. The first is that tariffs are still the issue, right? Those are still the hot topics right now. Those are still the big issues that are going on. The second thing was a Supreme Court ruling today about internet sales tax. This now suggests, there's not a law, this is kind of really backwards, right? Normally Congress passes a law, then it goes to the Supreme Court where it's challenged, and then the Supreme Court upholds the law. In this case, there's a ruling on taxes on the internet, and now Congress is going to have to pass a law to support the ruling. So the question is going to become, what's that law state? But today it actually impacted all the tech stocks in particular as that ruling came out, because this now infers that all internet companies will not have to start collecting sales tax on those purchases you make online. So the days of being able to order stuff on the internet and pay no sales tax are going to be gone here pretty soon. For smaller vendors and smaller online web services, they don't have the capability of collecting sales taxes and dealing with the reporting, all those issues. This is going to be an additional regulatory issue they've got to deal with. It's also going to be a hit to their bottom line because now they're going to have to deal with not only the sales tax, but paying sales taxes, etc. So that impacted a lot of these companies today. Amazon today was down about $12 on the news. Amazon's is much better prepared to deal with this already than other smaller retailers. So it's probably not going to affect an Amazon that much, but it is going to require that when you buy stuff from Amazon, you're now going to be paying a sales tax either at the point of origin or at the point of receipt, depending on what the law winds up being, as to what your tax rate will be on that. Now, of course, there's going to be a lot of really smart companies that figure out the loophole to this, so we'll see what that's going to be here coming up. But outside of that, that did take the market back down to support today. We finished the day down fairly sharply. Wasn't a pretty day in the market. Bonds did well today. They've been really kind of the safe haven play at this point. We saw utilities pick up a little bit of strength. Staples did okay. But again, we've come back down here, and as I'm showing you here on our chart, if you haven't seen our live stream, simply go by our Facebook page, Facebook/Real Investment Advice, or simply go by our website, click on the banner that says Watch the Show Live right now, and you can see these charts. But what I'm showing you here is this nice uptrend the market's been building ever since really the lows back in April. We had talked about when the market broke out of above the 100-day moving average, we had added some exposure to portfolios. We then rallied to resistance here at 2,800 and have since retesting now this previous breakout level, this support level that we broke out early earlier this, sorry, at the end of last month when we broke out there, that breakout is now support for the market. We've now tested that twice. So importantly, by tomorrow, the market needs to stay above this level. If we break down tomorrow and go lower, we're going to be retesting the 100-day moving average. So we've been looking for an opportunity to put some money to work, add some more exposure to our stock portfolio as well as our options portfolio and our ETF portfolio. So we've been looking for a spot to do that. We may have that. We're going to be looking to potentially, we've actually already kind of blocked up our trades. We're looking to add some exposure maybe tomorrow, if not Monday, depending on how the market acts. So we're going to be looking at this very closely. So we'll be updating all this analysis in this weekend's newsletter. So make sure you get by the website, realinvestmentadvice.com, put your email, just click the subscribe button, put your email address in. We'll email you the newsletter, but we'll be updating all of our portfolios, all of our analysis, and what we're doing along with each of our sector analysis as well. So that'll all be in there, and we'll keep you up to date. Now, I do want to talk about one other thing here as we talk about this, because again, while the market's acting more bullish here as of late in terms of the market itself on a weekly basis, which is much more important for us, and as longer-term managers, we really want to own stocks for long term. As long as we're in a positive uptrend, which we clearly are, we want to remain primarily long equities. But this recent, over the last week, and depending on how we finish tomorrow, it appears right now that we may have put in a second weekly top in the markets in the downtrend. This is going to be a key level to support. Now, again, as we've talked about, we're still in an uptrend from the bottom, but we have this downtrending set of tops now forming this very tight consolidation pattern. If this pattern continues as it is and breaks to the downside, that's the risk. Now, why would it do that? Well, we've got a lot of stuff that's still going on. The Fed's hiking interest rates. We've got global economy is really showing some signs of weakness. This tariff issue is going to impact exports and imports primarily from our corporations. Our corporations make up about 40% of corporate earnings. Corporate earnings are already being reduced. If you haven't been by our website today, Real Investment Advice, our article out today is about earnings, and we really dug down into earnings. And there's an interesting chart in there about South Korean exports. That country exports everything. Samsung, Hyundai, I mean, all these different exports come out of South Korea. There is a very close correlation between the rate of exports out of South Korea and earnings. That is termed sharply lower. Earnings are likely set to follow if that doesn't correct itself soon. And what that is suggesting is that the global economic environment is substantially weaker. So this break to the downside over the next several weeks as we head through the rest of summer is possible. Stock Traders Almanac just came out today, issued their sell signal alert for summer on the NASDAQ. Now, they've already done one for the S&P, but this is the sell signal for the NASDAQ, suggesting lower exposure to technology, lower exposure to small cap. In fact, that's one thing we're doing in our portfolios now is lowering our exposure to tech stocks and looking for some other areas that may be a little bit safer away from that for right now as we move through the rest of summer. But watch this breakdown here potentially in this weekly chart. Again, we update this every week in our newsletter, but this is going to be one of the key things we're watching here over the next few weeks as we wind up going through summer.